So let's start with a small example to understand this particular concept in a better way. Okay. So I'm starting with ratio analysis. Uh, Excuse me, just a second, just a second.
So can you please unmute, sir?
Yeah. So we are starting the topic called ratio analysis today. Like let's say this is Mr. A. Okay. Mr. A like draws like let's say his package is like 12 lakhs per annum. Can you see all this? Can you hear me clearly?
Yeah, yeah.
So Mr. A draws a package of 12 lakhs per annum. Now, see, uh, Mr. A sees what is his monthly expenses. So it makes like 1 lakh per month. Okay. So he sees what are his monthly expenses. He pays a rent of 30K. He has some 10,000 goes for his children's education, and then like 20,000 extra goes for all the provisions and everything, like and maid and all the expenses like electricity bill, all those things. 10K goes for medical expenses, 30, 40, 50, 60, 70. So 70K is what he's spending, 30K is his saving. Now you tell me, this savings of 30K, there are two options. He can just keep this 30K in his house in a safe. He can deposit this in a bank. Okay, bank, home, and like there is one more option. Like like I'll ask you a general question. If you want your money to grow, what shall you do? If you want your money to grow, what shall you do? Shall you keep at home?
No,
If you keep at home, will it grow?
no, sir.
No.
No. Of course, it doesn't grow. Correct. Why? Because your money is not like put into any purpose. Am I right? Putting it into any purpose is what? See, generally what the people say or what experts say, what analysts say, it is better for you to invest your money anywhere else so that it will grow, of course. So if you put that money at home, and let's say after 1 year you like monthly you are saving 30K, so you have 3.6 lakhs at the end of the year. Okay, so that money is going to be 3.6 lakhs only. It's not going to grow even a single penny extra is not going to get added up to this 3.6 lakhs. But when I see here, bank is paying an interest of 10%. I know no bank pays. Okay, let's say 5%. So if bank pays 5% interest, how much you are going to get like at the end of the year? How much you're going to have with you at the end of the year? Let's say this is simple interest. Okay, so 3.6 lakhs you are investing, and the bank is giving you an interest of 5%. So how much you're going to have at the end of the year? Any can you calculate and tell me? Yeah, extra 18k is going to get added up. So 3,60,000 plus 18,000 is like 3,78,000 is what you're going to have at the end of the year. So you are richer by 18,000 or not? Please tell me yes or no.
Yes, sir.
Yes, but this is like, do you think this is a like see, here the risk is very less and the return what you're getting is also very less. But see, we have various other options in the market to invest our money. So we can invest in stocks of some company, we can buy bonds of some company, we can buy gold, we can put the money in real estate. There are various other options available in the market. But why are you investing? Why you should invest? See, the time value of money is not the same every point of time. If I go 15 years back, flashback 15 years, or let's say like this is 2022, when I was in my graduation days, 2004 or 5, let's say, that time one Pepsi was available for 5 rupees. Today one Pepsi is available for how much rupees, or one thumbs up is available for how much rupees? One Chota Pepsi, 20 rupees. So the time value of money has changed or not?
Yeah.
It has changed very drastically. The quantity of Pepsi hasn't increased. The quality, I don't know. I just have a very big doubt about the quality these days. But the value for that Pepsi has gone up 15 rupees extra. So if I have to buy that Pepsi today, okay, suppose let's say that point of time I thought, one thought came in my mind, like it's 2004 or 2005, let's say, and after like in 2020 I want to buy a Pepsi, let's say. So how much money I should have in my hands to buy that Pepsi? Of course 20 rupees, correct? So what shall I do with this 5 rupees to make it 20 rupees, that like after 15 years? What shall I do with this 5 rupees to make it 20 rupees after 15 years? Any clue? I have to
Invest.
invest. So see, what I'll do is future value, future value. I hope you have some idea about time value of money is equal to present value into 1 plus r whole power n. This is compounding. Okay, I'm just taking compound interest. So your present value is 5 rupees. Suppose the rate of return, what? Suppose you have chosen some investment option which is giving you 10% returns, let's say. So 1 plus 0.10 whole power 15. So now you calculate and tell me how much it is going to be. Very simply we can do this. 1.10 whole power 15. Tell me what's going to be. Take out your calculators and put it on some work. It's going to be 5 into 4.177, and it's going to be exactly 20 rupees. If I take 4.1, let's say 5 into 4.1 is 20 rupees. So
20
you understood the magic here. It's like the logic is simple. If you want your money to grow in the future, you have to invest from today. If you are thinking about your child's education, like down the line after 15 years, 20 years, if you want to enroll your kid in a big college, you want to send him to United States, you want you want a better and secure future for your kids, you want to buy a house, you have any kind of dreams like for the future, then surely you have to start investing from today. Okay, so I can show you a lot of investment options available. Like if you take a SIP, systematic investment plan. Okay, what is this SIP? I'll show you. So I'm taking a small SIP calculator. Why I'm explaining you all this? It is relevant for your topic. Okay. So this is a SIP calculator. Let's say you only want to invest 2000 rupees per month. Let's say, and you want some return of around 14% from your investment option. Today you take any mutual fund or any SIP, 14% to 16% is what you're getting. In equity, that means if you invest your money in a stock, if you want to buy some stocks, they can give you very high returns because the risk is that much in that. Am I right? The more the risk you have in an investment option, the more the returns you should expect from that investment option. Correct? Please tell me yes or no. Yes in
Yeah.
chorus. Okay. So like if, let's say you want 14% returns, and let's say you have set a goal of 30 years. Now you see the magic here. This we call this as beauty of compounding. That means your interest. What do you mean by what's the difference between simple interest and compound interest? Any clue? Can you differentiate simple interest and compound interest? It's a very simple question.
So in the principal amount, we can get again interest.
Yeah, see, no, madam. Like, I'll tell you the difference. Any clue, Suma? Can you tell me what is the difference between simple interest and compound interest?
No, no idea, sir.
Fine, no problem. Suppose 1 lakh you have, and the interest is 10%. So, if generally investors won't go for this, but I'm just trying to explain the difference. Okay, first year your interest is 10,000. Here also it is 10,000. Here you have an amount of 1,10,000. Amount plus like principal plus interest is equal to amount. This is your principal, this is your interest, this is your amount. Okay.
Yeah.
And like here also the thing is same. But what happens in second year is you still earn only 10,000 interest, but here you earn 11,000. Why? You earn your interest on the principal as well as you earn the interest on interest. Correct? I don't know what they say in Telugu. Like interest on interest, interest on interest. Every time you'll be earning interest on interest. Okay.
Oh,
So make it to make it very simple. The principal here you're going. The principal is not going to change in simple interest case. It's going to be the same always. That's the reason why your interest is also same always. So you can see the difference here. You got 1,20,000 is the amount. 1,21,000. So extra 1,000 you're earning or not? Please tell me.
yes, yes.
Because of compound interest. So here what happens is this amount itself becomes the principal for the next period. Now here again the simple interest is 10,000. So you have 1,30,000, but here your amount of 1,21,000 becomes the principal for the next one. Next, okay. So into 10%, how much? So 1,21,000 plus 12,000, 100 something.
Yeah.
So you have how much? 1 lakh. Like if I take 12,100, so you have 0, 0, 1, 3,
120.
3, 1,33,100. So you see the difference is very evident and very clear. Isn't it so?
Right.
Correct? Yeah.
Right.
So that is the beauty of compounding, and the same thing you are going to experience here in my example. You invested just 7,20,000 for 30 years, but your returns are how much? 1 crore 3 lakhs 94,111. So the total you have become richer by this much. You invested this much, you became rich by this much. So total value of your investment is 1 lakh 1 crore 11 lakh 14,111. Now you can see the magic.
So this
Just
is just because of compounding interest.
compounding. Yes, yes, yes. So the basic why I wanted to explain you all this is to just create an idea, like showing you investment options in the market. So where were we? We were with Mr. A, correct? So now Mr.
Yeah.
A has 30,000 savings per month, and he is exploring various options to invest his money, because he really came to know that if he keeps his money with him, it's not going to grow, and if he invests this money, definitely it's going to grow. So there are many people who are guiding him. One of his cousins says you put in real estate. One of his friends, he says you put in bonds. One of his like cousins, they say, why don't you invest in some gold? Okay, because gold value is also growing. I'm seeing gold since 10 years. I've been seeing the change in gold. When I got married, like I bought some jewelry, it was like 26 to 28,000. It was going for 10 grams. Now you see 50,000 plus. So I barely got married 6 or 7 years back, 7 or 8 years back. So I like, you've been also experiencing all these things, correct? So things are growing. So one of the guys, he said, one of his friends, why don't you invest in equity? So this like, then he asks, Mr. A asks, why should I invest in equity when these investment options are available? So real estate is growing by, let's say, at a pace of 18%. Bonds are giving interest of like, let's say, 10%. Gold is growing by, let's say, at the rate of 15%. But what his friend says, see, I bought equity of Reliance company for 100 rupees like 2 years back. Okay, and today the value of Reliance equity, let's say he says January 1st I bought the stocks for 100 rupees. You know, stock market, if you are trading, if you know someone is trading, or if you also trade, you see the values go like anything. Okay, if it takes the pace or speed, it grows like anything. In a year also you can see a lot of changes. You won't believe, during the pandemic days, Geeta Renewable Energy, there was a stock. It was a penny stock, and people who bought it for 15 or 20 rupees, it has gone for 300 rupees. Almost all the people who invested 1 or 2 lakhs got somewhere around 40 to 50 lakh rupees returns. Okay, so the stock on Jan 1st was 100, and it has gone to 900 rupees now, like at the end of the year in December. So what his friend wants to say is, see, 900 minus 100 by 100 into 100 will give him how much percent returns? It has grown by 800%. Am I right or wrong?
Yeah.
Yeah, let's say, why we don't want 800%, 30%, 40%, 50% returns, 80% growth, 90% growth, 120%. So stocks can do that. So this like Mr. A's friend who is guiding him to invest in Reliance Jio, this has caught Mr. A's imagination, and now Mr. A has finally decided to invest his money into equity. Okay, but he has some kind of doubts. So, like, let's say Mr. A is not a finance guy, he is from engineering background. You know, engineering background people are layman to all this finance terms and all. Why? Because, see, you know, IT people or doctors and like people who are not from finance background, they mint a lot of money, they earn a lot of money, but they don't know like where to put this. Okay, some people, they are crazy about learning various things about market and all, so they try their luck in some or other like investment option. But better, what they can do is they can approach an analyst. So here is the analyst who is a consultant or who is an expert in like asset management, who guides, who has a lot of clients, and he guides various people on how to like invest their money and how they can generate good returns from their investments. So he is the one who is guiding people, and this guy who is an engineer, he doesn't even want to take that much of headache. He doesn't have time to research about market and do all sorts of collect all sorts of data and all. So he clearly goes to this guy and asks him, see, I want to invest in Reliance Jio company. You suggest me whether it is going to be a good investment or not. So, like, see, being a layman, his friend who has already invested his money in Reliance Jio, just said him that he got a return of 800%. That is just he's speaking about the profitability. Am I right? Is
Yeah.
he speaking about any other aspects? Is he speaking about the financial health of the company? Is he speaking about the future prospects of the company? Is he speaking about the like about the changes what could occur or what can impact the company. He's not speaking about. Am I right? He's just speaking about the profitability. Why? Because this guy being an engineer doesn't understand all those terms. He just see being a layman. What do you want? What they say in Hindi, kitna returns de rahi hai, how much returns the company is giving, that much is what you're concerned with, correct? So you are not an expert. If you are someone who is very knowledgeable in this area, would look into various other aspects or various other areas of performance of Geo company, and then at the end you would be convincing yourself to invest in that company, correct? So who can guide in a better way to this to Mr. A? This analyst, because analyst will read everything, each and everything about the company's performance. He will measure the company's performance in various areas, and he has lot of tools to do that. So we are speaking about what, correct, exactly, ratios. So ratios are nothing but such tools which the analyst would use to judge the performance of the company in various areas. Am I right? Correct. So what are the areas in which the analyst wants to judge the performance of company? There are various areas. So I'll start with first one, liquidity. So analyst wants to study or know the liquidity position of Reliance company. So if he thinks that the liquidity position of Reliance company is very strong, that would be a convincing factor for the analyst to give the nod or give or make a report and give a convincing report to his client, and definitely motivate him for the investment, correct? Point number 2, he would study about the solvency. I can say long-term liquidity. Then third point, he would study about the profitability. Then he would study about the turnover. What this chapter ratio analysis is all about, all these areas where we are going to judge the performance of a company, and we are going to study ratios which are handy or helpful to really judge the performance of company in all these respective areas. So we have 30 odd ratios to study. So we'll be studying some 3 to 5 ratios in liquidity. We'll be studying some 5 to 8 ratios in this. We'll be studying about 3 to 4 ratios in this. So every particular area what I am writing here, in which I have to judge the performance of Reliance Jio company, or know whether Reliance Jio company is up to the mark or is kind of matching the benchmarks. You know what is benchmark? The standards, correct?
Standards.
Yeah. So if Reliance company is matching the because ratios are nothing but predetermined standards. Let me be very clear, what are ratios? Ratios are predetermined standards. So ratios being predetermined standards, when I speak about standards, I speak about perfection. Okay. Some standards are made only based on perfection, correct? Let's say you want to make a recipe, and that recipe is like some recipe of some rice, okay, some fried rice or something maybe. So you know how much salt you have to add to it, you know how much spices you have to add to it. So if you like, why? Because if one spoon of salt is required to be added to this fried rice, will you add 2 spoons?
No.
Will you add 2 spoons? No, it's going to spoil the rice, correct? So the point is, if a particular utensil you are using and particular quantity of rice you are using, so for that you have to use particular quantity of salt. You cannot increase your quantity as you like, otherwise it's going to spoil the dish, correct? So standards are made in such a way that you don't make or don't perform any blunders. Like if you follow the standards, if you don't follow the standards and you do whatever you want, you will end up making a mess, correct? So you'll be messed up in that. So profitability, and then goes turnover, then goes overall profitability. So I'll prove you this point about the standard within some time with the help of the ratio. Okay. Overall profitability, and then about the market. Some ratios are also essential to study market. Market, we say them as market ratios. So these are all the areas in which the analyst is going to do a thorough study about Reliance Jio company, make a final report and give that report to the client, and also explain all these areas where, and also explain to his client the performance of Reliance Jio in all these areas. If, for example, see the client being a layman, only knowing this fact that Reliance Jio is giving 800% of profitability, it is just 1 year performance of Reliance Jio. We don't know about its future, correct? Let's say Reliance is a very debt-ridden company. It has lot of debts on it. Okay, this is only for 1 year. It is performing good, and the future it's going to take more and more debts, more and more debts. Do you think it's going to sustain? Do you think the company is going to be solvent enough to continue its business? Don't you? Is that not a danger factor regarding Reliance Jio, that it is taking very high debts and the debts are beyond certain limits, which is not permissible or not good for a company? Do you think you want to invest in such kind of company? Do you want to keep put your money into such hands whereby there is a danger of that company going bankrupt? Do you want to take such kind of chances of risk? I'm speaking about long-term investment, not about some intraday or daily basis you do trading. I'm speaking about 5 or 10 year period you want to hold the stocks. You're not going to take such chances. Am I right? So who is going to guide you in that manner? That by studying all the areas of performances of like Reliance Jio in all these areas, who is going to study that? The analyst. He is going to give you a thorough report regarding the Reliance Jio performance in all these areas. Correct? Yes.
Yes.
Now, seeing all these areas of performance measurement, let me just pick the first one and conclude today's session by explaining you about the liquidity position of Reliance Jio. Okay. Now, so I'm taking the first one, liquidity position, and trying to explain you about Reliance Jio performance or about Reliance Jio's liquidity. So we are going to see three ratios under liquidity position. That means we are going to study the liquidity position of Reliance Jio company. There are three ratios which studies the liquidity position of a company. So first one is current ratio. Second one is the quick ratio. Third one is cash ratio. Okay. Now, so we were discussing right now that we want to check the performance of Reliance Jio company like in this area. Okay, that is, we want to see what is the liquidity position of Reliance Jio company. We want to see the liquidity position, but the liquidity position here, what we are speaking is short-term liquidity. What is this? Short-term liquidity. Hello, can you hear my voice? Am I like audible?
Yes, sir.
Both of you?
Yes, yes.
Yeah. So I'm speaking about the short-term liquidity. See, for running a company, if I speak about liquidity, if you want to run a company, you have to have liquidity for short-term and also for long-term. To fulfill your short-term goals, you require short-term liquidity. Okay, that means funds, I can say working capital here. Working capital is such a fund which you would be using to run your daily operations smoothly. Okay, or to fulfill your daily commitments of your business smoothly, you require what? Working capital, correct? For example, if you have bought goods on credit basis from any of the supplier, you have taken a time of 1 month to make the payment to him. So for that 1 month time, you require funds to run your routine activities. Am I right? Run your routine activities smoothly. That is, you have daily expenditures. You pay you have some laborers you have hired for loading, unloading of goods, and you have some like suppliers who supply goods to you on daily basis, and you make some cash payments to them. And you have various other expenses which are routine expenses for you for daily basis. So to meet all those expenses very comfortably on daily basis, you require what? Working capital, correct? So for that, short-term liquidity is what you want. And if you have long-term goals, That means you want to buy some machinery, replace some machinery after 5 years. You want to like take over some company after 10 years. You want to set up a plant in some area after 5 to 8 years. You want to expand your business. You want what? Long-term liquidity. Am I right? So we will come to long-term liquidity afterwards. But right now, since we are studying about the short-term liquidity, we will restrict ourselves to this area. Okay. Now, I was speaking about Reliance Jio, and my aim was to study the liquidity position of Reliance Jio. That means how strong Reliance Jio is in its short-term liquidity. That means whether Reliance Jio has enough funds to run its routine activity on daily basis smoothly or not. If a company cannot meet its routine activity smoothly or doesn't have funds to run its daily affairs of business smoothly, then will you invest in such kind of company? Please tell me. Will you
No.
invest? Will you invest, Suman?
No, no, no.
Yeah, let's say this is a guy. He wants to go to college, and to go to college he requires like so his admission and everything is been done in a college. Okay, the college is 20 kilometers far away from his house, so he requires 30 rupees for bus travel, and some 20 rupees he requires to keep with him for some emergency purposes, and 50 rupees for some contingency reasons, like in any point of time he's stuck in some rain or something and he doesn't have money, he wants to have some meal somewhere, he should have 50 rupees. So daily he should carry how much? 100 rupees. If he cannot carry 100 rupees on daily basis, can he go to college?
No.
Can he
No,
pursue
not
his education?
regularly.
Yeah, he cannot go to college. He cannot pursue his education. You paid the fees for college, but you don't have funds to go to college on daily basis. So if you don't have that routine funds, then how? Are you like, can you study in that college? Can you manage to study in that college? No, that's what I'm saying. A business also has routine activities going on daily basis and routine expenses. To meet those routine expenses, it should have that strong short-term liquidity, and that's what we are checking right now in Reliance Jio. Okay, now. So I hope I am able to convey the message very clearly to you, both of you.
Yes, sir.
Yeah, yes, I think the concepts
Yes.
are very crystal clear. I'm not going fast, correct? Now,
No, sir.
so yeah, so I'm speaking about current ratio now. The formula for current ratio is current assets upon or by current liabilities. Now, can you tell me what is a current asset and what is a current liability? Anyone can define me what is? Can you define a current asset and current liability? Can anyone define? Okay, for that reason, can anyone define what is asset?
Current asset, the asset which
Yeah,
is within the which turns into the cash within the 12 months of operational.
yeah. See, yeah. Let me. If I speak about asset, asset is something or some resource which gives you resource which gives economic benefits. Economic benefits within a year, current asset. Beyond a year, non-current asset. Correct. So, like it is not only the economic benefits what it should give. Apart from that, its cost should also be reliably measured. Then only it can be called as an asset and it should be shown in the balance sheet. What do you mean by this cost should be reliably measured? Any clue? Ramesh, Suresh, Hitesh, all these A's are in my company. And like, can I put Ramesh as 1 crore in balance sheet, Suresh as 5 crore in balance sheet, Hitesh as 10 crore in balance sheet? Can I put their names and write in my balance sheet? They are working in my company and they are the human resource of my company, which is an asset. Of course, is not human resource an asset for the company? Come on, can you give me the answer, please?
Yeah.
Cap is
Human
Voice is
resources are.
breaking in between, sir.
Oh, okay, okay. That's the reason why.
Uh,
Okay. Can you hear my voice now? Now is it audible? Now is it clear?
yeah.
Yeah. So I'm asking.
Yeah, it
I'm
is
just
audible. The screen has been stopped.
again share. Now you see. Can you see the screen now? Can
yes,
you see
sir.
this? Yeah. So I'm asking Ramesh, Suresh, Hitesh, these people are working in my company. They are human resources, correct? Very
Yes, sir.
important asset for a company. So can I write their name in my balance sheet as these values? Can you see? If, can you tell me yes or no? And if it is yes, then why? If it is no, then why?
They are the creators of the company.
They are the hello.
Yes, sir. So they are the investors of the company.
No, no, not
Yes,
investors.
sir.
These people are working in my company. They are not my investors.
They are the resources.
Yeah, these are my investors. So I'm asking, it's not investors. These are my employees. I'm asking one simple question. These are the very important assets for my company. Okay, that means these are human resources. Every company's human resources are important assets for them. So can we write their
Right.
names in the balance sheet and show their values as 1 crore, 5 crore, 10 crore? If it is yes, then why? If it is no, then why? I think the question is more than clear.
So we cannot mention the
Mm,
names in the balance sheets.
Why?
can't hear.
Why we cannot show their names?
Once we are the investors only, we can show the names.
No, we cannot show anyone's names, of course, in any case. See, Ramesh, Suresh, Hitesh are human resources of my company. Of course, they are very big assets for my company. But can you measure their cost reliably? Can you measure their cost reliably? Do you think I can buy Ramesh for 1 crore, Suresh for 5 crore? Is it possible in today's world? Is it possible in today's world? Are they slaves? No, they are employees. Sorry to
Yes.
use such term. They are employees. I can buy their services and pay them for their services, but I cannot buy them. So something I definitely get economic benefits from these guys because Sundar Pichai is working for Google and they are paying him billions of dollars and he is generating and Google is earning trillions of dollars. Correct? They are generating revenues of trillions of dollars. But they cannot show Sundar Pichai in their balance sheet. Why? Because Sundar Pichai, being a human resource or very important resource for their company, is paid for his services. Correct?
Yes,
Am
sir.
I right? Yeah. So anything, if I have to show as an asset in the balance sheet, first should give me economic benefits. Secondly, whatever I'm showing, it should have a cost, and that cost should be very reliably measured. That means it should have a cost actually. Okay. Now, so now I was speaking about something, current asset, and I have told you what is current asset. Now, can you tell me examples of current asset, Suman? I'm writing current asset and current liabilities heading here,
I
and current
cannot.
assets.
Cash.
Yeah, I still cannot see the screen.
But madam can see. Maybe some. Can you check your connection
Uh,
once? I've shared it twice. Because madam, can you see the screen?
Yes, sir. It is visible, sir.
Yeah, like if you can
I
check
will
your
just check
Wi-Fi.
the connection.
Yeah, yeah.
Yeah, now I can share this. See the screen.
Yeah, yeah. Once you would have checked. Okay, no worries. Now Suman should tell me the examples of current assets, and Madam should tell me the examples of current liabilities.
Cash in hand, cash at bank,
Suman should say current
stock.
Current
assets.
asset. That can be an account receivable also.
Okay, second one.
It can be a raw material.
Raw material. Okay, I can say inventory or stock. Correct. Next.
Yeah, inventory. And then finished goods is the same.
That comes under inventory. Finished goods inventory. Stock
Cash.
inventory of any kind. Yeah, cash, cash in hand, cash at bank,
Yeah.
short-term investments. Anything else? Account receivable or any kind of receivables. Outstanding income. Then prepaid expenses. Okay. Make a note of all this. Make a note of all this. And then current liabilities. Yes, madam. Current liabilities.
Interest payable.
Yeah, any kind of payables.
Any kind of
Payables or account payables, whatever it is. Next. Bank overdraft.
bank OEC.
Yeah.
Short-term loans.
Short-term loans.
Any
Outstanding expenses. Income received in advance or unearned revenue, whatever you can say that. You want, you can say that. Next. Okay, these are enough.
Rent. Yeah.
Yeah, outstanding expenses, anything. These are enough. These are the like examples which are enough. Now, seeing these examples, let me see. Suppose the total of current assets of Reliance Jio company has come to 2 lakhs, and total of liabilities of Reliance company has come to 1 lakh. So what is the ratio?
2:1.
So what
Two
does it
into
mean?
one.
Yeah. So what does it mean that Reliance Jio company has to pay 1 rupee or $1, and it has resources of $2 with it. So can you say its liquidity is strong?
Yes, sir, it is.
It is very strong because
Yeah.
if it pays $1, it is still left over with $1 with it. Correct. So
Correct.
yeah. So the standards also say that ideal current ratio is 2:1.
2:1.
Now let's say if it is 3:1 or 4:1, then what? And it is 1:1, then what? See,
It's equal.
I will tell you, if you have made a cup of tea and you have taken 1 teaspoon of sugar, correct? And I say ideal. When I say ideal, that is perfect. That means 1 teaspoon of sugar is perfect for this cup of coffee. If you take 2 teaspoons, then what? It's going to spoil. If you take half teaspoon, it's going to spoil. That means you're not going to get the taste. So anything in excess or anything very less is not good. Correct? It's not perfect. Am I right?
Right.
But now it's not the thing which I can like I relate and I can convince you. I'll tell you why like these two are not good. I'll convince you. See, if you have listened to my words very carefully, $1 is the obligation Reliance Jio is having, and $2 is the resource it is having. When I speak about resource, see, what is the difference between fund and cash? What is the difference between fund and cash?
Cash is the liquidity. Liquidity
Yeah, like cash is liquid cash. Then what is fund?
for the future resources.
Yeah, see, the difference
Yeah.
between cash and fund is this is you have physically with you. This is nothing but a combination of cash as well as the future receivables or future cash what you're expecting from your assets if you sell, or from your debtors or receivables who are supposed to make you a payment after 1 month or 2 months, whatever the credit period you have given to them. It is that. So fund is nothing but, fund is not immediate cash. Cash is immediate cash. Fund may take time to convert into cash. Got my point?
Yes.
Mhm.
So that's what I mean here. I was saying resources. Resources means fund. So $1 is what is the obligation, and $2 is the resource what we have. That is nothing but fund, combination of cash and other current assets. So you imagine if your resources or your current assets are like current ratio is 4:1, that means lot of your funds are blocked in your resources. Is that a good sign? Lot of money is blocked in inventory. Lot of you have given credit to lot of customers and who are delaying the payments to you. That's the reason why your current assets are going on increasing. Is it a good sign? Does it show that you have good receivables management, inventory management, or other kind of managements? Do you
No.
think that's what you're doing good? No. So this is also one of the factors to consider, that company is not having a proper management, isn't it so? Point number two, 1:1 shows a very weak liquidity position. Why? Because if $1 has to be paid, $1 if it is paid, then you have nothing left over with you, correct? In terms of current ratio, am I right?
Yes.
So what does it show? It shows that 2:1 is an ideal ratio. And after knowing the ideal ratio of Reliance Jio, which is 2:1, the investor can definitely make up his mind to invest in Reliance company. Why? Because they are maintaining the standards of liquidity, strong liquidity. Okay, please note this down. I'll give you a small question to work on. Just a second. Sorry for the interruption. Okay, right on that one. I'll give you a PDF right now and ask you to solve some 2 questions on current ratio. Okay, will you try?
Yes, sir.
Yes, I'll try.
Yeah, I'm putting that PDF on screen only, so we can find some questions. So have you finished this?
Yes, sir.
Shall I give
Yeah.
you a So this is the question which you need to solve. What are they asking you? Uh, just okay. Do this first question. Current ratio. Solve this. You want me to solve or will you try? Hello.
Yes,
Do
sir.
you want me to solve or you'll try?
We will try first.
Okay.
Okay. My God, this much time you are consuming to do this simple question.
Almost
Within
same, sir.
seconds, we can do this.
Yeah, 1.68 is it?
No, it's wrong.
Let's see.
Shall I solve this? Okay. I'm solving the first one. I'll give you the second one. So, okay. So current assets by
Uh,
current
yeah.
liability is the formula. So I'll take account receivable as a current asset. I'll take inventory as a current asset. I'll take short-term prepaid expenses as my current asset. I'll take cash as my current asset. So this is my current asset. This is my current asset, and current asset. Okay. And then I would take my current liabilities as accounts payable. I would take interest payable due in 3 months, but I won't take this bonds payable due in 10 years. It's like a long-term liability. Okay. So accounts payable plus interest payable. So what are the amounts? 4 lakh. I'll just do it in like immediately. 4 plus 8, 12. 12 plus 80, 12 lakh 80,000, and this is like cash, like 14 lakh 14.8. And then accounts payable is like 2 lakh 60, and this is like 280. So 2.8. So 14.8 by 2.8 is how much?
3 point.
Sorry, madam. 5.28 something. So it's 5.29. Okay, that's the answer. Please make a note of this.
So
I'm giving you. Yeah, please tell me.
why this bond payable due in 10 years? It has not been mentioned anywhere, right? Into the current asset or current liability.
Long term.
Yeah, actually the list which I have given, that also doesn't have bond payable anywhere. And if you don't
Mm-hmm.
take the list also, see, I don't want you to mug up and by heart. The point is, it is due in 10 years. It's a long-term obligation, beyond a year.
Okay.
Of course,
Okay.
it cannot
Okay.
be taken. Okay.
All right.
Yeah. So 5.29. I'm giving you one more question right now. Solve it, so that we can continue the rest of the session tomorrow. I'll wind up the liquidity ratios too,
ठीक है.
with some very good questions. Okay. भी आप एक काम करिए. Good question. These are all typical questions. Yeah, this is a nice question. Do this question. Okay, then do this question, current ratio of this question. Yeah, this is the question. You should do current ratio. They are asking you quick ratio, but I want current ratio. I think screen is clearly visible. Yeah, do this. You can tell me to scroll down, I'll scroll down. This will be a simple one. Yeah, do the current ratio for this. Better. Rather than that, do this current ratio for this question. And that too you have to do for year 2. Okay?
Year 2.
Year 2, yes.
Total current is $255.
Yes.
Can you scroll bit up, sir?
Yeah.
Directly we can get total current assets is 255.
Yeah, you can take current asset 255, of course.
Current liabilities?
Current liability list is there. You can take current liability also. Because current ratio does not restrict you for any of the current assets to be skipped or any of the current liabilities to be skipped. Correct? You have to take all the current assets and current liabilities. For quick ratio, what you are going to study tomorrow, you are going to see some restrictions.
We are taking only the current assets total and the current liability total here, right? For the year
Yes,
2.
of course. So very simply seen, your current assets total is 255 and your current liability total is 125.
Oh, 125.
That's it, divided it in the ratio. Okay. Got it? Any doubts? Like Suman, any doubts you have?
No, it's fine. 255 divided with the 125, right? That's the
Yes,
ratio.
that's the ratio. Yes. So it's like something 0 point something you'll get. Just calculate and keep it. That's it.
Yeah, I'll just get
2.047.
Yeah. So that is like good. It's a good ratio. 2:1.
Yes, sir. 2:1.
Yeah. Fine then. Like today's
2 point.
session, we have done the introduction class for ratios, and as well as we have solved current ratio also. The class would have been like I would have taken all the ratios, but like introduction has taken a lot of time to like convince you why you should study ratio. No, no, convince in the sense not for joining and all. No, no, no. Convincing was why are you studying ratio analysis? The prime reason for studying ratio is nothing but to judge a company's performance in all the various areas which you are considering as an investment target and which you want to invest. That means you shouldn't feel yourself cheated that I invested in this company and I lost my money. No. After doing a proper background check of the company and knowing its performance in all the areas like liquidity, profitability, overall profitability, solvency, market, all these areas, you would be convincing yourself that Reliance Jio is going to be a good investment target for you because it is like performing in all the areas by matching the benchmark or standards what is required for it to achieve, correct? And ratio is going to guide you about all those benchmarks and standards which you should look in a company in which you're going to invest. That's all. Understood?
Right.
Yeah. So that's what it is. Like why you are studying a topic, first of all, you should know about that. That develops a curiosity in you to learn more about it. That's all. So now, tomorrow we are going to cover quick ratio, cash ratio, and we are going to finish the first liquidity part. And we are going to do some five questions, couple of questions in them, and some 5 questions in current ratio. So that would finish this set. We'll immediately go for next two set of ratios. Okay.
So, just one question. So, whenever we are calculating the current ratio, so we just uh, highlight or we just calculate the total current assets we and only the total current liabilities. Nothing
That's it.
apart from that, right?
Nothing apart from
From
that.
the entire sheet.
Yes, yes, of course. Nothing apart from that. That's the only data for this ratio. What you should
Rules.
see. Yeah.
Okay.
Yes.
So there would be a confusing columns also,
Yeah,
right? The
they would try to confuse you in any aspects, but you should be firm enough to take only that data.
okay.
That's what. Because it's a professional exam, so they will confuse you like anything. They'll try to put something or the other thing here. Okay, like for example, here if they say you one more point, let's say they mention something here like this. For example, you see here, I'll show you one point how they try to confuse. So last question, can you find out the current ratio for this question?
Long term with current portion
One
20,000 only from.
Yeah,
point.
that's sorry. You're asking something. So what would you have taken into current assets? You have taken cash.
Cash,
Did you take marketable
Cash.
securities,
securities,
accounts receivable, inventory, prepaid
inventories,
expenses, correct?
prepaid expenses.
Under current liabilities, what you have taken?
Payable,
Payables.
And
payable. That's
Long term.
that's it. But you should take this also
Okay.
because it is, even though it's long-term debt, but they are speaking about current portion of that.
current
This makes it
position.
current
Okay.
liability.
And even marketable security will come under current assets.
Yes, yes. That is immediately, you can immediately sell today and get your returns, na?
Okay.
Marketable securities means what? You have some stocks. If you sell today at some higher price, you get economic benefits today itself or within
All
2 days.
right.
Initiate
Within the
transaction
period.
take 2 days to settle. Yeah. So immediately you're
Correct.
getting benefits. So it's a current asset. Okay. So then you'll be like 10,000 plus 18,000. 18,000 and 120 is 138. 138 plus 12 is 150. 150 plus 375.
5.35.
It's like 5.25.
535.
So 5.25 and you take like 95.
95.
That's it. You get the ratio. Okay. So let's take the next session tomorrow. Fine.
ठीक है.
Yes, sir.
Okay, madam. So let's start. Let's take the next class tomorrow at 1 p.m. dot. We'll continue with more of the ratios. Okay. We will be having more questions to solve.
Okay.
Thank you. Have a good day.
Okay.
Bye.